Hello. Yes, is this Acne Crystal Ball Repair Shop? Yeah, David Lincoln. I have a crystal ball in for repair. Yeah. Yeah, the big one. Yeah, it looks like the Wizard of Oz one. Yeah, listen, how long is it going to take to repair that? Because I need it back soon. I got BYND earnings coming out after the close Monday. A week? I need it now. I got to know what's going to happen. Hello? Hello? I guess the crystal ball's not coming back until after earnings. And it's hard to tell what's going to happen. I saw a little poll online, however. Let's take a look at that. Let's see if I can get rid of my bookshelf here. I don't need that either. What's that image? Do we need that? I don't think we need that. No horse. All right. We'll put a display in. All right, here we go. So I was looking on Twitter, and I saw a poll that my buddy did. Let's see if we can find it here on what's going to happen in BYND, if it's going to go up or down. SPS, here we go. He always changes his Twitter name. So, okay, so SPS. Where will BYND close after its earnings report release? And 47% said above 250. 47% said below 250. And this is of 79 votes. It's not like 3 votes or something. And 6% said it's going to close between 200 and 250. So people are betting in both directions here on an equal number. And I know this isn't representative of all the money, but if it was, this forms even more of a case to just be short premium in this. If half the people think it's going up and half the people think it's going down, then maybe that push-pull battle will keep it from going too far in either direction, right? Well, that's at least what I'm thinking of. Anyways, I started messing around with my position on Friday, and I kind of overtraded it, and I gave away some money, and it was a real bummer. Let's take a look real quick here at what was going on for me on Friday, and yeah, it wasn't good. That's a little cliff note here. So with the little rally in place, I kept looking at what my position was and my upside and my downside. But right now, just to take a look, if I get out of the way, here is my actual position. And let's see if I can maybe enlarge this a little bit. It's a lot of little stuff, but it basically comes down to I'm slightly short delta. I'm still short 2 Nove 135 340 strangles, and then I've got some August extra puts to the downside. But my Greeks right now, I'm short 21 delta, so that means theoretically every dollar it goes down, I make 21. Every dollar it goes up, I lose 21. And if we look at the extremes here, my risk really is still to the upside. It's showing that my account would basically go to zero if this gapped up $56 without vol coming in at one moment. I'm sorry, 56% in one moment. So if we look and see on here what 56% would represent, that would mean if this opens 363, okay, right now it's 233, right? If this opened 363 tomorrow, then my account would lose everything. I pretty much consider it completely impossible for this to open up 363. That would be up 106. I'm sorry. What did we say? 333. Sorry, 363. So that would be up $130 on the open tomorrow. I think that's almost impossible. Otherwise, I wouldn't have this position on, obviously. But the question is not what happened. And what happened Friday was once it got up, it was all over the place. We can pull up the chart here, but it's just difficult for me to look at because I'm mourning the loss of my money. But you can see it made this big move down at about 1 o'clock, and I essentially got short right around here, this 234 area, and it went right back up in my face, and I covered a little bit here, and then it went back down again, and I re-shorted it, and then it went right back up in my face again. So I was essentially just getting pounded around, which is not usually like me. I was good on the way up here at not shorting it at all and just riding it up flat, but I kind of got picked off a little bit on Friday. And the way I was going about things was I was buying August put spreads. I was buying if we pull up the position here, the way I was shorting it is I was buying the August 230, 220 put spread. And then if I wanted to flatten out my position, I would sell the next put spread down, the August 227, 217 put spread. And this way I was avoiding just getting long this really expensive premium because I was buying one option and selling another. I was kind of sidestepping. That kind of canceled out the expensive premium aspect of it and just isolated the delta part of it. So I kept buying the 230, 220 put spread, and then when it went down a little bit, I was selling the 227, 217 against it. Or if it started to go against me, I was selling that put spread against it. And in the end, I ended up just essentially the reason I lost money, though, wasn't because of that. It was because volatility expanded in November, and I was short this Vega. I was short like 180 Vega. So each point November volatility expanded, I lost $180. Now, I expect that to contract right again and all come in after earnings. But the problem with that is I ended up covering two of my strangles, so that money's lost. The only way the money comes back is if you keep the position on and you wait it out. But the problem is that the higher price BYND got, as it went up to like 340, 341, all of a sudden it required more and more buying power to be short these out-of-the-money calls, and thus it became, and plus my upside started to look more and more bleak as we got closer to that 340 strike, and thus I felt the need to rein in my position as we sort of in a defensive way as we rallied up towards the strike. So that wasn't too great. The good news is I am still short Vega. It's showing me short 115 Vega, which is good. Because we know the volatility will come in. But the question is exactly how do we go out for earnings? And I have an idea on this right now. And if you look, I own some of these August junk puts. And the reason I owned them was because I was short, 4 of the NOV puts. Now I'm only short 2 of the NOV puts. And so these junk puts are most likely going to go out worthless. Look, the 130 puts are over $100 out of the money, and they're still trading like 50 cents. And so this is all just going to get crushed. And so my thought is probably that I will get rid of these before earnings come out, or I'll sell a slightly higher strike so that they're canceled out because I don't need them. And the other thing I was looking at is just keeping it simple, being short a few strangles. And when I modeled stuff, I was just doing this a couple minutes ago, and I looked and I was modeling stuff, and I'll show you what I was looking at. This whole position here, and most of my position cancels itself out. If you're long 8 of these put spreads and you're short 8 of the strike below it, then that basically just cancels it. It all cancels itself out in August. The bulk of my position is still this NOV 135, 340 strangle, and I'm looking at maybe taking that down. So I'm just short 1 NOV strangle, and actually Jan got pumped up a little bit more. Jan got pumped up a little bit more on Friday. Now it's up to almost 95 vol, and we know Jan options are more Vega intensive than NOV, and thus I was thinking of keeping just that 1 NOV strangle and maybe adding 2 Jan strangles. And when I modeled the Jan ones, which we can do right here, if we go to Jan, pull up the options chain, I was looking at the 160. Now, I know it seems kind of scary to sell puts in this stock that's so high, but these puts are just outrageously priced. Look at these Jan. I was looking at the Jan 150 puts. Actually, I was looking at the Jan 160 puts. $3,500 for 1 put. That's a huge amount of money. And so I was looking at selling the Jan 165 put and selling the Jan 340 call. It's not showing my strikes here. Here we go. Jan 340 call. So sell Jan 340 call, sell Jan 165 put. And that's one strangle you're selling for, hold on. One strangle you're selling for $4,500. That's a lot of money to take in for one strangle. And I know this thing can move, but still, $4,500 gives you some good leeway. So you sell 2 of these, it's $9,000 in strangles, right? And obviously there's a ways till January, and that's part of the reason. But you have to think again with this, if at the end of October is when this thing is going to loosen up, when more of the shares become available to trade. Remember, I think it was only 9 million something shares were released in the IPO, and the float's obviously bigger than that because some people who are in the company's shares were released, but more shares are going to become available and going to be released to be traded at the end of October 29th, I believe it is. And thus, this might come out of hard to borrow. And as soon as it comes out hard to borrow, these puts go down and the calls go up. So there's a lot. So these puts are going to get cheaper at some point, and it just seems like an obvious thing to be short a put for $35 that is $70 out of the money. That just seems like a hugely expensive put. Now, what is the pricing for these puts in November? Let's take a look at that. So the 165 put in November is $27. Now, that is very meaty as well. And we could model that also. So if you were to sell that put, what if I were to roll this put up from 135 to the 165 and leave the 340 call? How does that affect things? So what as you might be able to guess, what I do is I sit here and I just try out all these things and see how, and model them and see how my position would end up. And I have to admit, I did go, I hope that this isn't recording here. Oh, no, it's off. I did go a little overboard with on Friday with like modeling stuff and just looking at stuff over and over and over again. I did go a little overboard, but I'm excited about BYND. That's just all there is to it. So we'll see what happens. I do have an interview coming out that we recorded on Friday. Very interesting. I'm excited for you to check that out. If you follow volatility at all, you will know this person. He's never been on my program before, but like I said, if you follow, if you're in the Facebook group or you follow volatility on Twitter, then you will know who he is. So I'm hoping to get that interview edited sometime today and get it out to you. In the meantime, trying to figure out the position in BYND as we will come into earnings. You know, Monday's the last session to position yourself ahead of earnings. And I am thinking I am going to be short premium going into earnings. So we will take a look and see how it works out. Thanks for watching today. And yeah, stay tuned for that interview, which should be coming out probably in the next 24 hours. All right. I'll see you tomorrow.